Hello and welcome back to Business Matters at the Hindu with me, K. Bharat Kumar. In January, Business Matters took a look at the IT industry and the state of the jobs in that sector, given the slowdown that was going on in the rest of the world. We noted that compared with their counterparts in the US, Indian IT firms rarely resorted to large-scale layoffs. When a slowdown hit them, typically they have slowed hiring and gone especially slow on fresher hiring. So since January, let us see what has happened. But before that, let's take a peek into the financial performance of these IT companies. The results of these three reputed IT firms, Tata Consultancy Services, Infosys, and Wipro, tell us that revenue growth had been somewhat healthy. However, Q4 revenue growth had a lot of things left to be improved upon for individual companies. But looking at it from a yearly perspective, profit growth has not been uniformly good, especially in the case of Wipro. You see that it's contracted 7.1% for FY23 compared with the previous year. Significantly, attrition has continued to be high. It's in the range of 20% for all of these three firms. Attrition pertains to employees voluntarily leaving the company, expressed as a percentage figure. Theoretically, if a company's attrition rate is 20%, then its entire manpower phase changes once in 5 years. Of course, this assumes that everybody, top management, middle management, everybody goes through a churn, but that does not happen in the real world. But 20% is very high for a sector that depends so much on manpower. And through the year, it has been a bit of a bumpy ride. Infosys profit, for example, dropped 2.3% on a sequential basis in the last quarter of FY23 compared with the quarter ended December. Now, let's take a look at employee addition by these three majors. In the graph on your screen, tall bars, which is indicative of net manpower addition for Q1 FY23, that is a quarter ended June 2022. And then starts the decline. You will see that Wipro's employee addition metric started to mute from the second quarter itself. And then from the third quarter, beginning October 2022, all three firms have chosen to either let their net headcount go down or allow headcount addition to remain negligible. In other words, they didn't add staff as aggressively as they used to earlier, or they did not backfill positions that became vacant after some of their staff left. Why is manpower status so important for those looking at the health of these companies in the IT sector? Please remember that in IT services, employee costs form the largest chunk of all costs for these companies. For example, for TCS, employee costs can tot up to 45% of revenues at any given point in time. One surefire way of controlling costs is to control manpower addition so that costs don't rise up so sharply as to impact profits. How does the year ahead look for these IT services firms in India? TCS does not give any guidance to the future, but it did say that it has been impacted in FY23 by slower decision making by IT clients, especially in the banking sector in the West. You may recall that Silicon Valley Bank in California, US, collapsed, triggering lots of uncertainty in that sector. Shortly thereafter, European financial major Credit Suisse almost collapsed before being saved by a state-induced buyout by another major in Switzerland, UBS. Mitul Shah, head of research at Reliance Securities, said that IT services would not remain immune to worsening global macroeconomic conditions on rising inflation, economic slowdown, currency headwinds, and likely cut in spending. For TCS, he says he expects low double-digit growth in this current financial year, quarterly decline in order book, lower employee addition, higher attrition, and lower pricing ahead. For the current fiscal, Infosys has estimated revenue growth to be between 4% and 7%, which is significantly lower than what it has been showing in the recent past. For the current quarter ending in June, Wipro says that in constant currency, revenue would contract by between 1% and 3%. Net hiring in the IT industry is clearly slowed and net manpower addition has come down. Official figures show us that the IT industry added a net of 3.8 lakh employees for FY22, and that had declined to 2.8 lakh by FY23. This is a problem not just confined to the IT sector. A problem for the sector could eventually mean a problem for the government as well. Why? There are two parts to this answer. One is job creation. This has been India's Achilles heel for a while now. The IT industry was actually a significant contributor to jobs, and if that slows down, then job creation obviously slows down for the entire country. Two, IT services exports contributed significantly to overall services exports. In fact, the slowdown in merchandise goods exports was somewhat offset by the growth in services exports for the country. Services exports totaled about $323 billion out of a total exports of $770 billion for FY23. And IT services coupled with computer and telecom exports accounted for close to half of those $323 billion. So any slowdown there will impact our current account deficit, will have a bearing on our trade balance, and that will eventually impact the performance of the rupee in the global forex markets. Left unattended, this could make the purchases of all our imports, including crude oil, significantly costlier because obviously we use forex for purchases of imports. As we come to the end of this episode of Business Matters, there may still be some hope for those waiting to enter the portals of the IT service industry. Kamal Karanth, co-founder of Xfino, a placement services firm, points to the high attrition rates that we discussed earlier in this episode, saying it's at about 20%, and companies with an eye on cutting costs may actually look to hire freshers. However, that may take some time to pan out. Recently, there was news of instances where IT firms delayed onboarding of freshers. Employee rights organization Knights has claimed that Wipro has delayed onboarding or changed employment terms in offers made to freshers. And LTI Mindtree had made freshers enroll in skill enrichment programs. And if they failed to do that, then their offers from this company would stand revoked. What do you think of what's going on in the IT services sector in India? Do you know of anybody who has received an offer but does not have a joining date yet? Do let us know in the comments below. And if you enjoyed watching this, do not forget to click on like and share with your friends. And please remember to subscribe to our channel. Till we meet again, have a lovely week ahead.